Good morning, everybody, and welcome to another daily market report brought to you by Mike Bjork. Today is Monday, September 13th. Hope you had a wonderful weekend. And so let's see what the economic news is for today. Not a lot for releases today. Actually, the federal budget is going to be released at 11 o'clock West Coast time. And the prior was $104 billion in negative. So we'll kind of watch to see where we're at, much of a deficit we're in again. So right now it's based on the technicals. We have the stock market, which is up a little bit today. Also, when we look at the security or the bond page, don't worry, we have a bond rollover, which was approximately 28 basis points. Some of the news highlights for the day so far: we had the Basel III regulatory agreement. So the banks were a little bit relieved today because now they have approximately 8 years to meet the new balance sheet requirement. So there was concern that maybe they had to quickly build up some equity capital in a short amount of time to reach this requirement, and this agreement allows them a lot more sufficient time to be able to meet those requirements. We also have a little bit more M&A action. HP's on the buying spree again, or it looks like they're buying a company called ArcSight Security Software. So as I kind of mentioned before, I'm not seeing the media really covering this, but the Wall Street's loving all these M&As. But again, we have a problem with job losses. So usually results of M&As, there's somebody's acquiring somebody, they have overlaps in job positions, so people get laid off. So this is something to watch out for. We could have another problem with job losses here in the near future, especially if these keep continuing. Most of these are being acquired by because their stocks are so low, they're not even bothered with stock swaps. This is all cash, so they may not want to obviously keep a lot of those jobs around. Anyways, this continues with China. China's still showing some economic growth, so that's helping easing some of the fears. And then also the EU has revised some of their GDP forecasts upward. So some of the communities in the European communities looks like they're doing a lot better than they anticipated. Germany looks like they could be looking at 2.2, which looks like, I believe they said that was the strongest maybe in 20 years for them. So that, and then England also is doing pretty well, but their inflation is also getting a little bit higher than what they anticipate. Everybody else is pretty much secure with inflation, but it looks like England's a little bit higher. They like to keep it under 2%. The Bank of England wants to keep it under 2%. It looks like they're about 3% currently. So let's take a look at the bond market here. As I said, we left Friday off here, and we started off the day about 27 basis points lower. So we should actually have been starting here. And currently for the day, we're actually having a nice little rally, about 40 basis points upwards. So if we face it here, we should probably be closer in the 102.80 range, so we should be probably closer to here. Now, another reason to believe that we will probably show some improvements is look how far we've really pulled away from the 10-day moving average. So even when we were going upwards, it pulled right back down, and we go up and it came right back down. So we can't stray too far from the 10-day moving average. The same thing if we go too far down, we have to get pulled back right up. So expect some improvement in the mortgage rates here the next probably, hopefully, maybe a few days here. But this is something to kind of watch out for. You guys have a great day, and anything else changes, I'll keep you abreast. Take care.